So Kathleen, you said that you're broadly bearish for this Q3. Does that extend to the upcoming London Olympics as well?
Well, actually, funnily enough, the Olympics, I think there's been various estimates of the return it will generate, but it's something around 16.5 billion for the UK economy, which isn't bad when you think it was like a kind of 10 billion or thereabouts, 10 billion investment. That's not a bad return on your money. But the caveat to that is that 16.5 billion is stretched over a very long period, so 5 years before, 5 years after the actual event. So for the Olympics themselves to have any type of meaningful impact on short-term data and short-term performance of UK-based assets like the pound, it's going to really take a marathon effort, and we don't think that's going to happen.
So how would you trade the Olympics then?
Well, you know, how we're looking at it, we think that euro sterling, obviously that's been under a lot of pressure. We actually think that the pound could weaken just slightly, or potentially weaken slightly against the euro if things in Europe do stabilise. So if the sovereign debt crisis does stabilise, even at quite a fretful level as we are now, remember it's at kind of multi-year lows. So we do think potentially that euro sterling downside is limited. If we were to get another bout of panic, we may get all the way back down to 75 in euro sterling. But we generally think trading range bound, so around kind of 82 on the upside. And obviously the one thing that the Olympics could help boost, you can imagine like a few English winners, some nice weather, confidence could go up. So we could actually see the economy start to perform slightly better, which may protect the pound. Now we're not expecting the pound to rise in any meaningful way against the US dollar, but it could certainly limit some downside. And remember, the pound has never really recovered against the dollar since kind of the 2008 decline. So we're definitely not going to be getting back to that kind of 2-to-1 against the US dollar. But potentially we think the range could be somewhere between 151 and 158 this quarter, which obviously does span the Olympics. And again, if there's some sort of meaningful pickup in maybe consumer spending, a couple of weeks or during that month, or 6 weeks for the Paralympics as well, there will be, the effects are much more long term. Remember, for the real economic effects, the effects over the Olympics themselves would probably only be temporary. So maybe 1 month's worth of good retail sales data, one month's worth of exactly the boost to tourism, and what we've seen before in with other cities, the boost to tourism actually comes a bit later. So the major boost that comes from the Olympics is actually construction spending. So that's about 14 billion of the 16.5 billion it's expected to generate. So that's kind of been done already in terms of the regeneration of Stratford and the area where the bulk of the Olympics is going ahead. The other 2 billion is really in tourism, and that can be stretched over a very long period of time as the Olympics are used to showcase London.
And the whole key to the Olympics at the moment is the legacy.
Yeah.
And so the legacy for the pound, do you think that will similarly have a positive effect, or do you think it really is just a sort of a drop in the ocean? Really?
I think it's a drop in the ocean, I'm afraid. But, we've called the sterling the wallflower of FX. Largely because it's been moved by so many other things. If you think about what's going on in the world at the moment, you've got the US and its fiscal cliff, China slowing down, the Eurozone sovereign debt crisis. All of that is they're major themes that are dominating the markets. You're not hearing the UK or the Olympics or even the UK's growth trajectory really get much of a word in when you've got those kind of three big players suffering at the moment. So we believe the pound will go back to being kind of jostled around by whether we're in risk on, risk off, and that will impact the cable rate, so sterling against the US dollar. For things like euro sterling, that's going to be more impacted by obviously the Eurozone crisis. But obviously right now we've had another bout of QE from the Bank of England. We think sterling against some of the commodity currencies. So if the overall risk environment remains fairly stable in the short to medium term, then we could see cable underperform versus things like the Aussie dollar, the Canadian dollar, the Kiwi dollar, largely because their economies are on a slightly better trajectory and their central banks aren't cutting interest or are potentially cutting interest rates or pumping more QE into their economies, certainly not at the same pace as some of the other more major economies in the West.
Right, and to finish with, the Olympics are all about the medals, gold, silver, forget about bronze. You're not a fan of gold?
Not for this quarter, no. I mean, we're in a deleveraging environment. Deleveraging means that asset prices have to fall, and when you're in a deflationary environment, that's very gold negative. Remember, gold is like your traditional inflation hedge, and in a deflationary environment such as we find ourselves, where inflation is falling fairly rapidly across the world, obviously commodity prices are coming down as well, that to us is gold bearish. So we wouldn't necessarily, things don't go down in a straight line, but if we continue to see that same pattern of weak growth, weak inflation, then we could easily see kind of 1400 in the gold price, maybe by the end of this quarter, maybe by the end of the year.
Thank you, Kathleen. We'll leave the precious metals to the medals.
Yes, thank you.
Thanks.